Welcome back to the final chapter of Module 3. Throughout this module, we've explored the foundations of the credit card ecosystem, its history, mechanics, risks, and revenue models. Today, we shift our focus forward. We're talking about the future of credit card payments. In this session, we'll explore the rise of virtual credit cards, embedded and invisible payments, biometric authentication, tokenization at scale, credit cards in the context of open banking, fintech, and Web3. Let's begin. Part 1. Virtual credit cards. A virtual credit card is a card that exists only in digital form. It typically has a temporary number, CVV, and expiry date that are different from the user's physical card. These are generated through apps or digital wallets and are designed for online and recurring purchases. Benefits include reduced fraud risk, temporary numbers limit reuse, easy cancellation or rotation, control over usage, merchant locking, expiry, spend caps, better experience for subscription payments. Banks and fintechs are rapidly adopting virtual cards, both for consumers and corporate expense management. Part 2. Invisible payments. The future of credit card payments is becoming increasingly frictionless. Think of Amazon's one-click checkout, ride-sharing apps where you never take out your wallet, or smart home devices that reorder products automatically. These are all forms of invisible payments, transactions where authentication happens behind the scenes and the user barely notices. How is this possible? Stored credentials with tokenization, device fingerprinting, background risk scoring, biometric verification. Invisible doesn't mean insecure. It means that trust signals and customer context are being used more intelligently. Part 3. Biometrics and next-gen authentication. Fingerprint scanning, facial recognition, and voice ID are becoming increasingly common for authenticating credit card payments. With the rise of mobile-first payments, biometrics are not only more secure than passwords, but also significantly more user-friendly. Strong customer authentication (SCA) regulations are pushing issuers and acquirers to adopt multi-factor authentication, and biometrics play a key role in meeting compliance without increasing friction. Part 4. Tokenization everywhere. Tokenization is no longer just a security tool. It's becoming the foundation for how digital card credentials are managed across devices, platforms, and ecosystems. Card-on-file merchants, subscription services, and in-app commerce all rely on tokenized credentials to prevent fraud and ensure seamless renewals, even if the user's underlying card changes. Token vaults, network tokenization from Visa and Mastercard, and device-bound tokens are turning static card numbers into dynamic, adaptive tools. Part 5. Credit cards in a changing ecosystem. Credit cards are being redefined by broader industry trends. Open banking. Through secure APIs, users can link their bank accounts and credit profiles across platforms, unlocking smarter underwriting, personalized offers, and instant approvals. Cards are becoming more contextual, embedded in broader financial journeys. Embedded finance. Businesses are embedding credit cards directly into their apps or products. Think ride-hailing apps offering co-branded cards or SaaS platforms integrating expense cards for users. Fintech disruption. Fintechs are rethinking what a credit card is. From dynamic spending limits and virtual cards to cards that change numbers after every transaction or auto-categorize your purchases in real time. Blockchain and Web3. Decentralized identity, smart contracts, and crypto-backed credit lines are on the horizon. While still early, they point to a future where traditional card rails may coexist with decentralized alternatives. Wrap up. The future of credit card payments is not about replacing the card. It's about evolving what a card is and how it works. Plastic becomes code. Authorization becomes context. Fraud defense becomes prediction. Credit cards, once static instruments, are now programmable, intelligent, and embedded in everything we do. Thanks for joining us in Module 3. Stay curious and keep building the future of payments.